Hello, leaders of tomorrow. Okay, we're back at it with another video, trying to make more information, provide more information to you guys. So today we're going to talk about if you're the owner of a nonprofit, how should you pay yourself, and what are the requirements, what's the structure. So first, when it comes to a nonprofit, running a nonprofit, it's not easy because in the beginning, you don't have a lot of money. So in the beginning, you might not be able to pay yourself. You might have to, wait until grants and donations come in to pay yourself. But let's just say you do have some monies where you can take out a little stipend or something like that. You can do that through an owner's draw. I would say do that through an owner's draw. That's a equity account in your bookkeeping or accounting. You would have the name of the account as owner's draw, and from there, that will be basically a way where you can take money out of the business for personal uses or needs. So you would do that as, like, say, an owner's draw. That would be what it is in accounting. But now let's say you're able to pay yourself, money's coming in now, you're getting grants, you're getting sponsorships, you're able to pay yourself a part-time salary for a full-time salary even, and with your employees you can do the same. All unemployment taxes in this scenario apply, even with a nonprofit. You don't escape the employment taxes, which is Medicaid, Medicare, Social Security, unemployment. You don't escape those, so you have to pay them just like any other business, and they would be taken out however your pay period is structured, whether it's weekly, bi-weekly, every month. Once you run a payroll, you will enter your payroll every week, every 2 weeks, every monthly, through a payroll system, and those taxes will be taken out, and then they will be sent to the IRS, I believe, every quarter or every month, depending on the structure. And there's a specific system for payroll employment taxes that you would put those through to the IRS. So again, all those employment taxes do apply, even with a non-profit organization paying salaries. So there's two main platforms that I know that you can use to pay employees and pay yourself. One is QuickBooks Payroll. The other one is Gusto. I will be putting those two links in the description so you guys can get the link and apply for those any one of those two programs. I mean, either one is good. Personally, I use QuickBooks Payroll. Keep in mind, QuickBooks Payroll is separate from actual QuickBooks, the accounting software. It is separate. It's under the same branch, and you can run them simultaneously, but they are two separate subscriptions that you would have to apply for and pay for. Some people get confused with QuickBooks Payroll and QuickBooks itself. They're not exactly the same thing, even though they're under the same program, and you can run QuickBooks Payroll within QuickBooks. So just keep that in mind. You can either use Gusto or QuickBooks. I don't think it's too expensive, maybe $30 subscription per month, and per employee maybe $4 to $5 per employee. But again, just keep in mind, when you're ready to run payroll, you will be responsible for the employment tax. You're not exempt from that, even though you're a 501c3. Okay, guys, that's it for the video today. Check out the description below, how to raise $100,000 for your nonprofit. It is in the description. Click on it, sign up. There's a lot more great information there for free that you can use. I'm here to help. I'm your tax professional. Any questions or concerns you have, click the link up in below, and we could talk. We could talk more about your situation. So again, guys, like and subscribe to the channel. More to come.